We are officially live on YouTube for the Thursday edition of the Not Your Average Investor Show, the JWB
Week.
I am your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because of his great concepts, because he generates cash flow, because he's a great co-host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Great to be with you.
And with us, as always, as well, our community manager, the one that brings us the moments that matters, and that's why we call her MTM. Also, because her name is Madison the Magnificent. Say hello, Madison.
Hi, everybody.
And just want to welcome you. If you just tuned in on the podcast, if you just tuned in on YouTube, love having you here. But the people we love the most are the people that go to NYAIS.com. That's Not Your Average Investor Show, NYAIS.com. Register, make a little time in your day to join us on a Tuesday or Thursday when we go live at 12:30, and you get to be part of the community, which means you get to be part of what, JC?
The roll call, baby.
The roll call, baby. We got Madison welcoming everybody in the chat. We got our leadoff hitter batting first today.
That would be John Henning.
John Henning, the leadoff hitter. We got our MVP batting second.
That would be Mr. Lee Bishop.
Mr. Lee Bishop. We got Michael Santorios in the house, wishing us a good afternoon. We got the early bird checking in fourth.
That would be Dean Curry.
Dean Curry from Columbus, Ohio. We got Misty Johnson from the Denver area. She's been a past star of the past guest investor. We got our regulars, the second family of the Not Your Average Investor Show.
Rosalind and Gary Riley.
From Marietta, California. Good to have you, Riley's in the house. We got Leo Faraganan.
Dun, 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 dun.
Faraganan.
Dun, 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 dun.
Checking in. Good morning from the Bay Area, California. Let's rock. We got the ringmaster.
Andrew Barnhill.
Andrew Barnhill. Wishing us a good afternoon. We got Lisa Bojorquez.
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 Bojorquez. That makes sense. Like in a proper Spanish, Lisa Bojorquez. Lisa, I hope I'm saying your name correctly. Let me know if I'm butchering it. New name.
New name.
Welcome to the party, Lisa. I'd love to have you from the San Francisco Bay Area. Love the San Francisco
Wonderful.
Bay Area.
How did you hear about us? We would love to hear.
Yeah,
let us know in the chat.
Let us know in the chat. We got Deborah Schwartz back in the house. Good morning, everybody. Deborah, good to have you. We got Pedro Nacianceno from Jersey checking in.
Right, all right.
We got the first family in the house.
Mm.
The matriarch, Ken. The patriarch, Ken. The matriarch, Carolyn. First family, the Malines.
We salute you.
Who else we got here? We got the fairy godmother.
Of course, we got the fairy godmother.
The fairy godmother. Jen Pilsen checking in from beautiful Monterey, California, saying she can't wait to see us all in Jacksonville for the tour next week. We can't either. Lisa said correct, but I said it like 30 different ways. So I'm just gonna go with Borges because you sound like a noble Spanish duchess or something like that. I like that, Lisa. We got Raj, my ride along partner, Raj.
All right,
in the house. Hello, all. Raj. Well, a little surprise for you today.
We do.
The NYAI.
Oh, that's right. That's right. We do.
Not to break it too soon. We got Eddie Harris checking in from Atlanta. Good to have you. Eddie and Lisa learned from JWB from friends looking into JWB in Jacksonville. Well, we'd love to have you, Lisa.
So happy to have you.
We're an open conversation here. And after the roll call comes my favorite segment, when Madison shares good news.
All right, everybody. Some super cool news to share with you guys today. I mentioned it a little bit last week that we are doing a 50-50 tour or 50-50 raffle. So it has something to do with the tour as well. We'll get there. Anyway, so a little bit of background on what the 50-50 raffle is. It is in efforts to support JWB Cares to construct and donate a house to a veteran that has graduated from the K9 for Warriors program. So I was really lucky to have been a part of it last year, got to watch the veteran walk into her house with her dog. Super full of emotions, super cool cause. And you get a little piece of it too, because the winner gets 50% of the proceeds that we raise, hence the 50-50. So super cool little pricing is it's going to be $10 a ticket. I will put how to enter in the chat for you. So you can just click that link, $10 a ticket or $50 for 10 tickets or $100 for 25 tickets. Tickets are not limited. You can buy as many as you want, which the more you get, the better chance you have of winning. The winner will be announced at the Not Your Average Investment Tour on the 25th. So you can buy tickets up till then. You do not need to be present at the tour to win. We'll give you a little call if you just so happen to win and you're not there. But super cool opportunity to support a good cause and have some fun.
And how much have we raised so far, Madison?
We raised $310 so far. We just opened it up like a week ago, and that $310 came from all of you community members.
And then we just got another pledge for another donation.
Oh,
You want to think about that, Pablo?
I'm in for a hundo.
Yeah, baby. Yeah, baby.
Don't threaten me with a good time. Like, gamble.
Well, thank you all. Thank you, Pablo. Thank you, everybody who has already started to donate. This is really cool. And as we were starting to think about this donation, this 50-50 raffle, we really wanted this to be largely based on our community coming together, largely the Not Your Average Investor community coming together. I really wanted to see how much we could raise really through our show. And so we put a goal together to raise $2,500, and I just wanted to see what we could do. So we're up to 310 or 410, right around there. Would love it if you guys could think about donating here. Again, one person's going to walk away with a nice check as you receive 50% of the donations. And you don't have to be present to win, but we hope you're there because the tour is going to be awesome. And so it will really be a fun event. You get to support an incredible mission. And all of this goes to that very special day where we change somebody's life, build a brand new home, give that home to that veteran who needs a helping hand with affordable housing, and their life is never going to be the same. So thank you all for your support. Can't wait to see us crush this goal.
Yeah. So something that the team over here didn't say is this goes to getting a veteran a home, right? Like this is veterans. Y'all gave away 2 homes last year
We gave away 1 home last year, and we have given 4 homes away. Every single year we have given 1 home away. We are working our way up to doing 2 homes per year. I haven't gotten there yet. We could use your support.
One day. Also, behind the scenes, when Gregg and Madison were going to announce it, they're like, "Oh, by the way, Pablo, you have to participate." Like, come on, I'm not going to gamble. Like, I'm in on this, right? So I was.
You did it last year too.
I was already going to do it, and then another little thing that I don't think you guys are ready for me to share. But then we started thinking, what happens if Pablo announces that he's the winner? Not a good look.
True.
And Gregg's like, you know what? At that point, I think we're going to have to pay you and then pick another winner. So community, you're cheering for me to win. And if I win, Madison, that's good news.
Love it.
The link is now in the chat for anybody who wants to click it and donate.
Oh yeah. So jwbrealestate.com/raffle. jwbrealestate.com/raffle.
Raj Bantu with a $200 pledge. Let's go, Raj.
We're talking, Raj. All right. Thank you so much.
In the chat, if you're in, I'm only here for a measly 100, but Raj is coming over the top.
Incredible. Thank you,
Raj. All right. So, property of the week. I said, wait a minute. We teased it before. We got breaking news.
Hot off the press.
Hot off what's going on.
And speaking, Raj, that $200 pledge. Well, guess what? We were thinking of you with the breaking news today on the property of the week. In past episode, Raj has asked about months of inventory. And so I try to keep you guys updated maybe once a month or so on month of inventory and pricing here in the Jacksonville market. So I've got that update for you. So December 2022 median home sales price in Jacksonville came in at $337,000 on 2,302 sales. So let's sprinkle on a little bit of context there, okay? Year over year appreciation historically in Jacksonville, going back from 1982 until now, is how much, Pablo?
4.6%.
4.6%. So if you look at that pricing that I just shared with you, and you look 1 year ago, where was pricing in December? Well, that would show you that home values have gone up 4.4% year over year. So again, this asset class compared to other asset classes, what's going on in the stock market right now, Pablo?
I believe it's down
considerably.
considerably.
Since its previous high, right? In 2020, we've had a little bit of a bump in January, but since 2022, you're down probably about 17%, maybe 15%. In real estate, comparing that year over year here, you're up 4.4% for Jacksonville real estate. And if you go a little bit farther out rather than just month over month, we're averaging about 12.5% appreciation over the last 6 months. Okay. So this asset class is continuing to perform, whereas others are struggling.
Say that again, man. So you said year over year, we're up 4.4, but over the last 6 months is 12%?
Yeah, I'm glad you stopped me there. Yeah. So you can look at this a couple of different ways. So when you're talking about what home price appreciation rate is, you take the seasonality component out of it by using 1 year ago and then the month that you're, so like December last year to December this year is how you would quote home price appreciation.
Got it.
However, and that's where that 4.4% number comes in. However, months tend to do, when you're only looking at a month, you can somehow get deceiving information. So an additional way to look at this and sort of check yourself is to take out the last 6 months. and compare those 6 months to a year ago of 6 months.
Oh, okay.
And so you take the average over the last 6 months from a year ago and the last 6 months from the most recent 6 months.
Okay.
And you smooth it out. So you remove like the possibility of 1 month being super good or 1 month being super bad. So you kind of use both of these to get the context that you need. And so if you're using the 6 month trailing appreciation, that comes in at about 12.5%. Does that make a little more sense?
So it sounds to me like then right now we are early February, right? So I'm assuming this is through January.
December.
Through December. So then July through December of last year of 2022 compared to July through December of 2021, there's been a 12% appreciation versus December of 2021 versus December of 2022 has been a 4.4%.
Nailed it. Well done, bro.
Cool. So then the more real number, I would assume is that 6 month one. Like that's more what's happening in the market.
I think you use both of those in conjunction to check yourself. But yes, if you're quoting year over year appreciation, you would actually quote 1 year ago. So last month would be that 4.4% appreciation for this month. However, that number can change drastically for next month, right? Depending on what happens. January numbers, we typically finalize the January numbers as we get closer to the middle of February. And so I'll be able to present next month's numbers here in the coming weeks as well. And then the all important months of inventory number, which is exactly what Raj was asking about in the beginning. I love that we get questions about months of inventory. We're such a savvy bunch here that we get questions about.
Tell, Jen Bojorquez. Tell her what months of inventory is in case she doesn't know.
So months of inventory is a really important metric to understand because what it does is it gives you the supply side of the equation when it comes to housing. And it's been able to be tracked over market cycles now. And if you have a certain amount of supply relative to demand, you can kind of see what home prices are going to do. And so this whole months of inventory measurement is a way to track that. So what you do is you take the number of homes that are on the market, on the MLS in your market, or you can do this anywhere. We do it here in Jacksonville. And then you look at the number of home sales the previous month. And if that number comes out to between 6 to 7, history would tell you that you should see average home price appreciation for your local market over the next 6 to 12 months. What's average of home price appreciation in Jacksonville?
4.6%.
4.6% per year. If you are over 7, and the farther you get over 7, that would lead you to believe that you have more supply than the demand can handle for that market. And as you get way above 7, you would expect to see lower than normal home price appreciation. On the flip side, if you are below 6, that means that you have more demand for your market than supply. And you would expect prices to go up at a rate that's higher than normal home price appreciation. So we track this. We've tracked this every single month since 2014. And it's a very good indicator of where pricing is going to go. It's not the only thing, but it's something you need to understand. And that's why we keep you all updated here.
Love it. All right. So what is it?
So months of inventory came in at 3.06.
3.06.
3.06.
All right.
So we have, I mean, that's way low. Historically speaking, that is way low. And that's why I keep sharing this message that, right, don't believe the hype that this is going to be a real estate crash. Like this is not going to be a real estate crash, right? I don't know if prices are going to go up a little bit or maybe they come down a little bit. It doesn't really matter when you think about the long run. But when you look at the fact that we have half the amount of supply that this market needs to be a normal functioning real estate market, that is what is going to bring consistency and stabilization to home prices. We are slowly creeping up with months of inventory. I expect it to continue to increase. It will go up slowly but surely, but we are a far way away from 6 to 7. And 6 to 7 would lead you to believe that there's normal home price appreciation going on. I will say the big X factor here is the Fed. So we have to pay as much attention to the Fed as we are paying attention to months of inventory. And that's what we'll continue to do for you guys.
Got it. You know what else is creeping up, GC?
What's that?
The donation amounts here in the chat.
No way.
We got Raj that already put in 200. Jen put in a hundo.
Yes.
Tony D in the house put in a hundo. And Bill Shields came in with 300 pesos,
my goodness.
bro.
You guys are amazing.
Yeah, man. We're getting there, man.
Thank you guys.
Yeah.
You guys are just special. We really, really appreciate you guys.
And we got to call out our favorite name who just showed up, Aaron O'Neill.
Into the light.
Aaron, good to have you here. All right. So those are the updates on the market. MOI is at 3.01. The year over year, month to month, is that like 4 something for?
I'll give you the real number. You're close.
Yeah.
On every number, you're just like so close. I'm like, do I correct?
You
Do I
know,
not?
you know it's not my specialty to be completely accurate on numbers.
MOI 3.06. Year over year appreciation, 4.4%.
Uh-huh.
And if you smooth it out over the most recent 6 months,
Mhm.
year over year appreciation comes in at 12.5%.
Okay, there you go. So that's the market update for you. The man everybody knows just came in the house.
Noah Rendari.
Noah Rundari. Noah, good to have you, buddy. And we also didn't say hello, Tony D, properly, or Bill Shields with his
Oh,
Buenos
my
Tardes
goodness.
Amigos. So that being said, let's go to the property of the week. GC, you're never going to believe where this property is. We're going to magically whisk ourselves away here to 1212 Never Drive, Jacksonville, Florida, 32205. Purchase price of $238,000, monthly rent of $1,408, a 3-bedroom, 2-bathroom, 1,230 square foot house. It is finished, new construction, leasing term of 2 or 3 years, annual appreciation rate, that market best here that we talk about here in Jacksonville of 4.6%. And what the Not Your Average Investor Show community comes for here, this IRR. This is what we're investing in, an IRR of 14.74%. Thanks to the 10K package that has been extended. GC, you want to tell them about the 10K package?
Absolutely. So we have extended the largest incentive package that JWB has ever offered. We are now extending this through March 31st. And it's really rare that JWB offers an incentive. We haven't done it before this, certainly not to this extent. So it's really rare. And we're extending it through March 31st of this year. So if you are thinking about adding additional properties to your portfolio, if you maybe are on the fence and thinking that this might be the right time for you to jump in, if you got money in the stock market and you're worried about those values going down, you can put properties under contract all the way through March 31st, and you receive just about $10,000 of incentives. And those incentives are broken down like this. You receive 2% seller concessions, which will come out to about $5,500 of money that is contributed from JWB towards your closing. So it's money you don't have to bring to the closing table. It stays in your pocket. The next thing is we're going to waive your initial tenant placement fee, which comes out to an average of about a $1,500 value. That's money that stays in your pocket. And then lastly, what we're going to do is contribute $3,000 towards your maintenance cost. Maintenance will happen as an owner of rental properties. It does happen. But how cool is it that the first $3,000 is going to be on JWB's dime? So it's a really wonderful opportunity. Hope you all take advantage of it. I'll tell you, you all have been taking advantage of it. Part of the reason that we decided to keep this thing going is because it was such a hit. I'll tell you, in January, we had the most properties that were put under contract since June of last year. Great way to start out the year and a great way to help you, because a lot of this is based on what the Fed is doing. And we don't really know what the Fed's going to do. We don't really know what inflation is going to do. So by taking advantage of this incentive package, we're able to drop your interest rates on your loan, and you're able to walk into an asset that can perform, 14, 15% IRRs. It's just really hard to find those in today's investment world without taking outsized risk. And this is something that will provide consistency and stability.
There you go. The package is still good and well. This home is here. It's the property of the week. It's actually available. Most of these things are like flying off the shelves.
There we go.
We don't always get to have one that's actually available. But you see, what I really want to know is, what do you love about this property?
Thought you'd never ask.
Yeah.
But I'll tell you what I love about this property. I'm going to go a little bit of a different direction. We know the IRR. We know about the incentive package here. Let's get a little bit more granular here. Let's talk about homeowners insurance costs. Homeowners insurance costs. Yeah. So there have been some challenges in the insurance world, especially in the state of Florida. But the properties that have not been affected by those challenges in the homeowners insurance world, new construction properties. Right. New construction properties have not faced those challenges. So the premiums that you have on your new construction single family rental properties are incredibly low. So the insurance cost on this per year for this home here on Never Drive, which we call Neva, internally, but Never Drive, under $400 a year is what you're going to pay for insurance here. Right. So compare that to a typical renovated home. Your insurance costs might be $800 or maybe closer to $1,200 for a typical insurance premium for a renovated home of a similar size in a similar neighborhood. So you really are able to save some cash flow there. And it's one of the ways that we're able to get to an average monthly cash flow of over $130 a month, which is what this property will produce. And what I'm doing is I'm looking over the first 10 years of ownership here. On average, as your cash flow grows each and every single year, you're going to wind up with about $130 of monthly cash flow. So those are some of the things that I love about this property. What about you?
It's a lot to love, man. Man, I wish that this 10K thing was around while I was investing. Like, it's just such a good deal, right? Like this, like 14.74% IRR, man. That's just so attractive to me that it's wonderful, right? I think the ones that I got in on were somewhere around like 12% because we didn't have this in at that point. But man, getting 14.74% in an asset class that is so stable and also provides cash flow, to me, it's just like a wonderful, wonderful investment. I have a hard time looking past that.
Well, can I make you feel a little bit better?
Yeah.
Your expected returns on investment might have been lower than 14.74, but you bought and then the values went way up. So you're going to be in the same boat as far as your actual returns on investment. We're going to overperform for you. And so don't feel too bad.
Okay. You're right. You're right. Then in that case, I change it to the fact that every time I look at this property, I'm going to be like, how's our home at never going to get it. Never going to get it. Never going to get it.
I think you just wanted to make sure you got all the properties with the really good street names. And we got one on Lucky Drive for you.
That lucky one. All right. Cool. So that being said, Bob, we had some people check in after I did the roll call in between all these amazing announcements. First of all, Misty Johnson coming in with $200.
Yes. Thank you so much, Misty.
We've officially raised $1,000.
Holy cow. Wow. I never thought that we could do that. Our community is just incredible.
Huh? We're at 1,600 right now.
Holy cow.
We came in at like 200. You were at 250 when you first said it, right?
310.
We were at 310 before. We've raised an additional 1,600. We're at 16. We've raised an additional 300, 1,300. You guys are incredible. Thank you so much. The power of our community is just incredible. And man, I'm gonna have a smile for the rest of my day for sure.
It's really cool. It's really cool. I just want to, everybody that checked in that I haven't said your name, right? Like Bob Wiesner, I know you checked in. Bob, good to have you. Bob, my friend Bob, we had some lunch not that long ago. Walt Hart checked in. I think that's a new name.
New name?
I want to make sure that we welcome you.
Welcome to the party.
That's a great name. 2 syllables, 2 names. Love it.
Definitely can trust that guy. 2 syllables. Easy.
And Danette Colvin, good to have you in the house as well. And the better Gregg is also checking in.
Oh, thank God.
Gregg Stone. Howdy, Jay. All right, Bob, speaking of my buddy Bob over here, he had a question in the chat that kind of scrolled up. If you're new and you are having some Q&A, I prefer if you could put it in the Q&A, it would help a lot. So that way I don't lose it. But Bob is asking, what's the median square footage for that? You know, we talk about this like median house in Jacksonville being priced at $337,000. Do you know the median square footage?
You know, I'd say I don't know exactly, but you know, you got to think it's probably somewhere around, 1,100, 1,200 square feet, I would imagine. Yeah. 1,300. There's a lot more workforce housing type of homes than the big homes. And so some homes are a lot more than that. So yeah, I'm just kind of shooting off the cuff here, but yeah, I'd say probably 11, 12, $1,300.
Okay, cool. Dean Curry is saying that it looks like 3 JWB properties across the street. Improving the neighborhood. Do you know anything about this neighborhood? What part of town is this in?
Know this neighborhood very, very well. In fact, do you want to kind of see what it looks like?
I'm going to start looking at it.
Well, actually, just click on that little here thing there, that tour. You can actually see. All right. Well, let me just kind of walk you through as
talk about it while I'm working on it.
So I put that view 3D tour home, but I wanted you to see what a resident sees when they make the decision to rent your home. We have worked hard to make it very easy for residents to rent, and they have self-guided showings. And so this is what a resident is able to see. And so if you actually want to turn it all the way around, I'm assuming we're going to have 3 JWB homes on the other side. And yeah, there we go. So you can see JWB homes that have been built on the other side. These homes right here in the 32205 neighborhood on Neva Street and Orton and some of the other streets that are right down the road there. Some of the
new one going in right now, right?
Yeah, new one going in there. I'm sure that's a JWB home, right? These are some of the neighborhoods that we absolutely dominate, right? There are hundreds of homes within a mile radius that we focus on because this is the right neighborhood for risk mitigation and for upside for you. And we've been doing the same thing since 2006. So I know we're kind of looking at it here with this property, but pretty much every property I put in front of you, I could do the same thing. And there's a good chance you'll see a JWB home on that street. It's because we do the same thing over and over and over again.
We haven't hit on that in a while, GC. What are the characteristics of neighborhoods that you look for as a JWB, as a rental property investor? Like, what are the characteristics that you're looking for?
Well, to make this thing work, you need to mitigate risk right off the bat. And the way you mitigate risk is you have low prices and high rents. Low prices, high rents. So you need to have high rental demand. And so we look at the neighborhoods in Jacksonville We look at the median home sales price. Let's see if you're paying attention. What's the median home sales price right now?
330.
360. Okay.
330 something.
Yeah, 330. So very good, guys. Very good. 337 is the median home sales price as of December.
Walt had it.
There we go.
337. Kelly Barenbaum had it.
Very good.
There you go.
You guys are paying attention. Very good. So that's the median home sales price in Jacksonville. We want to be in neighborhoods that have below that. And so that's the first thing that we look at, right? So the median home sales price in our neighborhoods are a lot lower than 337. And then we're in neighborhoods that have significant rental demand. And so that rent to price ratio is strong enough to produce positive cash flow for the investor. And
so lower than median price, higher than average rental demand. Okay.
Absolutely.
What else? I know there's other things.
And then you want to make sure that you're surrounded by jobs. You need to make sure that this asset is something that continues to perform each and every month. So you want to make sure you're next to job creators, which we talk a lot about. And, just being in a growth market like Jacksonville gives you that upside. Specifically, the largest change agent for outsized growth is downtown Jacksonville. And so you'll notice that, our properties are located generally 15 to 20 minutes of a drive within that sphere of downtown Jacksonville, because those are the neighborhoods that we believe are going to do the best as downtown Jacksonville continues to grow and thrive. So those are the 4 neighborhoods. There are 4 neighborhoods that we invest in. Are they able to see this screen right now, Pablo?
Yeah, but I'm about to pop it on.
All right, cool. So we've been investing in those 4 neighborhoods for as long as JWB has been around. We haven't changed it. There's 4 neighborhoods. You can see on this map now, all these blue dots. It's hard to see where one starts and one stops now, because these are all the properties that JWB has sold to you as turnkey clients since 2006. There's over 3,000 properties.
Wow. So these are all sold as turnkey. These aren't just property management. This is all that you've sold as turnkey.
No.
So these are the neighborhoods that you describe are, all surrounding this urban core. It's the Arlington neighborhood, south side, west side, and north side, right? Is kind of how you describe it.
Yeah. Yep. Exactly.
There you go, man. I like that. You also, I remember when we were talking about it the first time we did the show, something about crime as well, right? That there's no violent crime.
Yeah.
Like there might be some crime in the area, but it's not violent crime because that makes the property management difficult or something else.
Yeah, exactly. I mean, it's unreasonable to think that you can go into an area and find zero crime. I mean, there's crime in my neighborhood, right? I mean, my neighbor across the street left his garage door open and somebody stole a $6,000 bike from his garage, right? Like he wasn't happy about that. So the idea of there being no crime is a fallacy no matter what, but we want to be in neighborhoods that we do not see violent crime. And again, we know these neighborhoods so well because we do this over and over and over again. We know where we don't want to be. And at the end of the day, we care so much about our team because we believe that if we take care of our team is going to take care of you as clients, that we make a very clear decision to avoid those areas that we would see violent crime. Yeah. And so that's how we handle that.
And our new friend, Lisa Bojorquez, she asked, what type of workforce is in Jacksonville? Is it tech, medical? What's the economy like here, GC?
Yeah, well, the number one employer is the military in Jacksonville. We have 2 Navy bases here. One of them is located right on the west side called the Jacksonville Naval Air Station, or NAS JAX. So it's nice to have the military as the number one employer. The number one private employer is a little company called Amazon. Amazon has, I don't know how many distribution facilities they have now, at least 10 or 12. And they started to invest in the infrastructure here in 2017. So Amazon there. We have 4 Fortune 500 companies, and we have a really strong healthcare, fintech. Of course, shipping logistics is a big thing. Our port is the 2nd largest port in the state, and it's the largest container ship port. Yeah. And those are some of the main economic drivers for Jacksonville.
Yeah. And Lisa, if you go back, we've had other city officials and stuff like that on the podcast. I'm trying to think who the best one that described that. I think Daniel Davis's episodes described it really well. Yeah. I came from Miami, right? Like I came from Miami like 4 years ago. Not a very diversified economy down there. Like it's very boomer bust, heavily, hospitality and construction. And now other things have started to blossom down there. But here it's the military presence is a very, very stable force. The logistics industry is a very, very stable force. And then kind of like the black swan upsides of what's happening here is fintech is big here. Healthcare and health sciences is big here. Do we want to we haven't even talked about that, huh?
I know. Are we talking about the UF?
That got announced. Yeah.
Okay.
So fintech, healthcare tech, and healthcare, right? There's a Mayo Clinic here. And that's it, right? Those are the big ones. It was logistics, government, healthcare, fintech and finance, right?
We need to shine a light on this UF announcement.
Yeah, huge announcement.
Absolutely. And Madison, could you find that link that I emailed to you? I don't know if people are going to be able to read it because it's a business journal article, but besides the point. Talk about it. So guys, there is something that is even bigger than the presence of the Jacksonville Jaguars to the city of Jacksonville. There's something even bigger than an NFL franchise in the city of Jacksonville. And it was just announced 2 days ago. It was sort of leaked a little bit, or at least teased
on the show.
On the show here when we had Mayor Lenny Curry here.
That's right.
Of course, did not announce it, but you could see he had that smile on his face.
Yeah, he was like, yeah, we just got back from Gainesville, and
he's like, you know something about that, Greg, don't you? I'm like, Mr. Mayor, I do.
Yeah.
Because we've been a part of this process of hopefully bringing a UF graduate campus here to downtown Jacksonville. And that graduate campus is going to offer classes and provide housing for those in the fintech space and healthcare space. And this will be in downtown Jacksonville. Now, I'll tell you, this is, in talking with my business partners and those locally here, this is the biggest announcement that Jacksonville has made recently. I don't know how far back you go, but I was told that this is bigger for downtown Jacksonville and for Jacksonville overall than the announcement of the Jags back in the day, like to put in context there.
Yeah.
So this is huge. Why is it so big? It's because if you want to improve the quality of life for Jacksonville, the best way to do that is to raise median incomes. If you can create an opportunity to bring high-level talent here to learn fintech and to learn healthcare, those incomes are incredibly high. And if you have a university like the University of Florida, who is building a campus potentially in downtown Jacksonville, do you think that's going to entice maybe some, employers to maybe think about relocating to Jacksonville?
Oh yeah, definitely. See, I mean, when I was in Miami, I was deeply steeped in economic development. And I remember we were going real hard at being like Silicon Beach, right? They've actually done a pretty good job of it, of recruiting the tech companies down there.
Right.
But the biggest obstacle that we had was we need a feeder to the system, right? Like one of those things that like Silicon Valley has is Stanford and Berkeley and all these different things, right? Like Boston Tech Scene has Harvard and MIT and all these different things, right? Like you need these feeders that feed the talent for the jobs, for internships to happen, for programs to be developed with research and also and innovation, right? And this idea of UF looking at $100 million satellite campus that's going to be specialized in fintech and healthcare tech and AI, right? Like that's the thing that you didn't say. UF has one of the biggest AI computing powers in the world.
The largest supercomputer.
The largest supercomputer
is owned by the University of Florida.
Is owned by the University of Florida. It's one of the biggest schools in the world, right? So it's got all these resources, and having a campus right in downtown is, like the easy thing is to bring the money, right? Like like Miami had the money. You can bring people with money, but the choke point is the talent, right? So like this thing to me is a major unlock for the economic development in two verticals that aren't going anywhere, right? Like,
exactly.
Do you think healthcare is going anywhere and healthcare technology? Do you think money technology is going anywhere powered by AI? It's just like all the bells and whistles. I think it's an unbelievable announcement.
It's huge. And so now I'll share with you, we're not across the finish line yet. This hasn't been 100% sealed. There is money that has been earmarked or will be earmarked by the state and by the city. If $50 million can be raised privately, talking to the people that are in the know, we feel very good about that potential happening. Folks have been coming out of the woodworks to pledge because they understand the impact to downtown Jacksonville and to Jacksonville overall, if we can make this happen. So prospects are looking good. It's something that I want to keep talking to you guys about because you guys heard it here first, right? This is huge. And if we talk about what we just talked about as far as choosing neighborhoods, right? If you want to be a part of this without being a part of donating that $50 million or without wanting to go and buy a commercial building downtown, what's the best way for you to do it is to buy single family rental properties around downtown Jacksonville. And that's what we specialize in. That is what we believe will earn the best risk adjusted return for you. And this is also what we're going to be showing you on the JWB Not Your Average Investment Tour.
That's right.
On February 25th. So if you haven't signed up yet, just hearing this, and they couldn't have timed this announcement any better
That's right.
for the tour.
That's true. That's true. Why don't you, we actually haven't really fully announced the tour today
Sure.
right now, right? So we are doing a Not Your Average Investment Tour, February 25th. We've announced it multiple times on the show, but just as a reminder, if you go to jwbrealestate.com/tour, you can sign up for it. Meeting at 9 in the morning. We're going to have some education. Then we're going to have an investor panel. You're going to get to ask Jen and Lee and a couple of other, and Leslie and, some investors on a panel, just basically what their experience is, ask your own questions. Then we're going to go see a couple of properties. We're going to do live versions of the property of the week. We just got megaphones.
Yes, we did. My kids love them, by the way. We are going to have a blast with this.
Yeah. We're going to do a live version of the property of the week together. Then we're going to come back, have lunch, and we're going to do this walking tour of downtown where we're going to see are we going to see the site of like where this thing is being proposed?
I mean, sure. It's right there. We can certainly talk about it.
Yeah. We're definitely going to talk about all that stuff. And then happy hour, everybody gets together. We got the fam together and enjoy it. It's going to be a really, really good time. jwbrealestate.com/tour. If you want to be a part of that, would love to have you there. But this is exciting, man. So to me, to bring it home is this idea that raising median incomes is the way that property values go really, really, like sustainably go up.
Right.
Like it's one thing to, have these moments in the economy that go up and down, but to outpace the market, to outpace the economy is if your city's median incomes are going up, your property values are going to increase dramatically more than just one that stays stagnant. Right. So that to me is the giant opportunity, is this idea that as investors, right, like we have these homes around the urban core that are all worth this, and we know historically that they appreciate at that. But what y'all are doing in downtown of just like placemaking, looking for the median income thing, right? Like if you come to downtown, you realize how like under deployed it is, right? Like it's this like dormant asset, and all these things coming together to me lead to this idea of this is why the ULI is calling Jacksonville the next supernova city, that's going to be like Charlotte, it's going to be like Denver and Nashville and these places that real estate went crazy. And I'm just really pumped that I got to start hosting this show just in time for me to scrap a couple shekels together and get some.
There we go.
Yeah.
You're gonna do.
It's cool.
It's special. And to start off, what you just said there, you talked about median incomes rising. If median incomes don't rise, let's go to the opposite side. Median income, if you're in a market where median incomes are not rising, population is not growing, you have a lid, you have a ceiling on your return on investment because rents cannot go up, right? Home prices cannot go up. So it's incredibly important that you invest in a market where you see the potential for median incomes to rise, assuming that you're going to be buying and holding for a long time. And that's really where Jacksonville starts to, outpace the competing markets right there. It's an opportunity to get in a place where, quite frankly, other people don't see it. People from the outside actually see it. People locally here, less people locally here see it. Yeah. But you all will see it. I'll help you see it when you come to the tour on the 25th.
And let's expand on that a bit, right? You see, we talk about this a lot on the show, how rental properties, right? It's the 5 profit centers, right? You got cash flow, you got appreciation, you got debt pay down, you get tax write-offs and inflation hedging. And the trick to the whole thing is to be in a positive cash flowing market and then maximize for appreciation, because you get the most return on your money from appreciation in the long term. But you need to be in the short term cash flow positive. And people often overcorrect for how cash flow positive it is versus how much appreciation you get.
I like that.
And the other markets that are cash flow positive, like the Kansas Cities, like the Clevelands, which I know you love, Birmingham, like these other markets that have slightly more cash flow than Jacksonville, are in markets where it's not necessarily growing super fast. Some are actually shrinking, like Cleveland is, to your chagrin. And it's the opposite here, right? Like here it's the opposite. Here it's like, this has been a city that's been one of the 10 fastest growing cities in the US for the last 10 years. It's right now having a real heyday, right? Like all these like tailwinds of trends that are, Zoom towns and people moving from the north or from more expensive places to less expensive places with better weather. And the fact that when you pool all those less expensive places with better weather, Jacksonville still happens to be the least expensive and the best weather. So it's hard not to see this place from the outside, like I did when I first got here from Miami, and not be like, this is a gem, right? Like, and that this thing is really, really happening. And I could see this turning into an Austin, Texas kind of situation.
Agree. I agree
really
with
cool.
everything you said there.
Yeah, that's cool. The weather. Yeah, Lisa, the weather, man. Growing up in Miami, I didn't realize that just a little bit further north, the weather is so much better, right?
Yeah.
Like Miami right now is still too hot to wear a blazer.
That's true.
Gross.
Your sweater game and your blazer game is so much better in Jacksonville than it is in Miami.
Yeah, man. I can only wear a blazer in Miami like 3 days a year, and it's because I'm dying to wear a blazer because I want to hide my little shoulders. But I'm also gonna sweat. The weather here is really much more like Southern California than it is like Southern
You
Florida.
called it, man. I love that. You said that this is Orange County 40 years ago. And it makes more sense every day. I'm here.
So Greg and I talked to the Duval County Medical Society on Tuesday, and then we're talking to them again today. I sat next to a couple of doctors that were in the Navy, and they had spent time in Southern California.
Yeah.
She had spent a lot of time in San Diego.
Okay.
And when I was like, yeah, I tell people that when I got here, I feel like this is Orange County 40 years ago, because Orange County 20 years ago when I lived there looks like what this place is going to be in like, one generation, right? Like in 10, 15 years. And she's like, oh my God, I say the same thing about San Diego, right? Like when I was in San Diego in the 90s, it was just like this.
Really?
Like downtown was just like this. It felt, like the weather was just, you had great road trips.
Yeah.
And you had a bunch of like cool natural resources, but stuff really wasn't happening in downtown. And I'm like, no way.
That's awesome.
Because I have the Orange County comparison, but she was talking about San Diego. Which to me, I hear San Diego, I think it's a notch above Orange County.
Yeah, exactly.
But yeah, we totally broed out about it.
It's very, very cool. I think about downtown San Diego, which I used to go and speak at conferences over there quite often. And I would get outside of the airport and I would see this big Navy ship. And I was like, oh man, that'd be so cool if our downtown could have a Navy ship. Well, we have a Navy ship that's stationed downtown right off the river. We'll be able to see that on the tour. So there's a lot of similarities there.
A lot of similarities, man. So, for me, it started with the surf culture, which I was our first meeting. I'm like, hey, Greg, I think we got to talk about why Jacksonville has surf. Right. And you're like, I don't think investors care about that, bro. But they do.
They do.
They do. We have proven that they do. All right, man. I think this has been a great POT Dubs.
This is awesome.
Yeah.
Man, you guys just made my day. Thank you so much for opening up your hearts, opening up your wallets, and donating to the cause. This is just incredible. It's really cool to see what our community can do.
Yeah, it really is awesome. What's crazy to me is what you just talked about, right? Like this idea, I was in such a foul mood 2 hours ago.
Yeah. I don't often see it, but I saw it walking in. I was like, buddy, you okay?
I was in here. I haven't been feeling well. I haven't been sleeping well. I'm just like, the weight of the world is on my shoulders. You're like, whatever. And we started doing some work. And then as soon as the show started getting close, I just got a pep in my step.
You just got in.
And it's because I can't believe that, every Tuesday and Thursday today we had 30 plus people hanging out with us in here, asking great questions, donating to charities together. This community really, really just floats my boat.
Amazing.
And I want to thank you for taking an hour out of your day right now to hang out with us. And next Tuesday, you know what we got going on, GC? We got another episode of Not Your Average Insights.
Ooh.
Where GC and I comb through the news stories of the day.
Ooh, I love this.
We come with our hot takes and we invite you to join in. So
love this.
It's going to be a lot of fun. Hope to see you on Tuesday. Hope to see you February 25th, right? We're getting close to like the moment where you're either coming or you're not.
Yeah.
Right? So
we
got like almost 30 people, something like that, right? It's going to be a lot of fun. Hope to see you there. And from now till then, till Tuesday, just remember, if you want to do this, if you want to be a part of this group, you just can't be average. See you next time.
See ya.